As another note on capitalizing versus expensing, some more points to cover. What costs are capitalized as compared to expensed? Here are general rules that we can pretty much use for the rest of the exam. Any costs necessary to get an asset ready for its intended use. So as we've seen and as we will see, we are going to have costs such as shipping costs, installation costs, and legal costs to get land, machinery, materials ready for use in a factory, in a manufacturing setting. Those costs will be capitalized. Any costs incurred to acquire, so buying land, buying machinery, defend, we'll see this in patents when we have successful outcomes. When we pay lawyers and we successfully defend our patent, then those costs are going to be capitalized to the patent. Improving, we saw this in our graphic chart in the prior slide, or otherwise permanently benefit an asset. These costs will all be capitalized. Goodwill follows its own rules. We have capitalization of goodwill, but as I say here, follows its own rules. It's a bit of a trickier one. It can only be created, and as such capitalized, because goodwill is an asset, from acquisitions, and costs incurred to maintain it are expensed. Let me repeat that and go over that again. We can only create goodwill when we purchase other companies, when there are acquisitions. If we have costs incurred to maintain this intangible asset of goodwill, they are all expensed, no exceptions. You cannot add goodwill, you cannot increase your goodwill from anything other than acquisitions. We will see a lot of tricks about that. Again, one more time, because it is that important, I'm saying it. You can only create the intangible asset of goodwill, and as such capitalize those costs, from acquisitions and buying another company. R&D costs are expensed. So think of the term R&D expense. These are good general rules. If you see something that says we spent so-and-so X amount of dollars on research and development, that's going to be expensed. Again, just think of the term research and development expense. It's probably a term you've heard before, just in the general realm of accounting. Remember that capitalized costs are added to the balance sheet as assets, and expense costs are added to the income statement as expenses. In choosing between an additional asset or an additional expense, the asset is more preferable to a company, so that there is incentive to try to capitalize these costs, thus the importance of this concept. Think about that. If you own a company, you're preparing financial statements. You want those financial statements to look as good as possible. And how do those look good? They look good from having more assets, less liabilities, more revenues, less expenses. So you can see right here that, and I'm putting air quotes here, you can't see me, but air quotes, if you capitalize something, that's more preferable than if you were to expense something. Just think about that, and if you were the owner of the company, you'd probably want to capitalize as much as possible. All of what we see here applies to inventory, PP&E, intangible assets, R&D, and software costs, among others. That's what we're referring to here. This is pretty much a good capture of what we're going to see with our capitalizing and expensing on the FAR exam.